day friends. In the subject of fundamental of investment, today I will be talking about investment protection. That is, investors, the people who invest in the security market, they must feel that wherever they are investing, their money is safe. Still in India, a very large number of savers deposit their money in the bank fixed deposits. During the COVID time, the 6 lakh crore rupees worth of money was being parked in the PSU bank's fixed deposit. Despite that, the return which you get in the fixed deposit, which any investor get in the fixed deposit in a bank, is lower as compared to the return in the security market, especially in the stock market. Despite of that, many large number of investors prefer to invest in the bank fixed deposits. The reason being, they have a fear that if they invest in the equity market, in the security market, their money may not be safe. I am not saying it is not safe, but they have a fear that their money may not be safe and the return which they are getting fluctuates too much. It is by nature of the security market, that's why the return fluctuates. But long run, it gives a better return than the bank's fixed deposit. What it means to say is that investors tend to get a belief in an investment, in a financial instrument, if they feel that there is a transparency in the system, the money will be judiciously used, their money is protected, and the purpose for which they are giving their money for investment purposes, the money will be used for the same purpose and it will be used judiciously and they will get good return. So for this very purpose, they tend to invest in the security market. Today, for the first time in India, if I talk of the August 2022 figure, the depository accounts in India have the first time crossed 10 crore figure. That is, 10 crore depository accounts, as we have discussed in the past also, that these days that investment in the security markets, investment in the stock market is made through, means your shares are being deposited in the depository. So each individual who wants to deal in the stock market, who wants to deal in the financial instruments, has to open, especially in the stock market, has to open a demat account. In the month of August 2022 itself, 22 lakh new depository accounts have been added. What I am trying to say is that in interest in the security market, interest in the stock market is increasing at a fast pace, at a fast rate. So in this scenario, when the market capitalization of the stock exchanges is more than the India's GDP, today approximately $3.2 trillion is the market capitalization of the Indian stock market. When I say market capitalization, as you are aware, market capitalization means all those companies which are listed in the stock markets, whether in the BSE and the NSE, means these are the two large stock exchanges in the country. And if you multiply it, the number of companies listed in the stock market multiplied by their share price, that gives you the market capitalization. So I was saying that the market capitalization of the Indian security market, Indian stock exchanges, is $3.2 trillion, which is more than India's GDP, which is almost, if you calculate the GDP to market capitalization to GDP ratio, it comes to be 116%. Means a large number of investors are coming to the stock market, coming to the security market. In such a scenario, it is very important that they must be protected. They must be protected from malpractices. There must be transparency. There must be complete disclosure of information by the companies, by the intermediaries. Then they will tend to get more belief, because investor is the backbone of the security market. Because unless you have a large number of investors, right, the security market is not going to grow. And as in a country like India, 140 crore people, means approximately 140 crore, we are the population of 140 crore. In this large population, even this investor size is not enough. If I talk in terms of the active investor, almost in India, as per the NSE and the BSE data, 1.2 crore is the active investors in the stock market. So, given the size of the population, even this investors number has to increase. And this will increase gradually and slowly but steadily if there will be more transparency in the market. For this very purpose, the Securities and Exchange Board of India was being formed. So anyway, what is basically the investor? So investors are the backbone of the security market, and hence protection of their interest is crucial for the healthy growth of the capital market. If we want in India, the security market, the capital market should grow and it should flourish, right? So it is very important that the investors must be protected from the malpractices, from the price rigging. So the term investor protection is a wide term, encompasses the various measures designed to protect investors from malpractices of the companies, depositories, merchant bankers, the lead managers, the underwriters, all these intermediaries who deals in the security market. There must be transparency. The investor must be protected from the malpractices of these intermediaries, the stock exchanges, and there must be a strong regulatory body which can prevent these malpractices in the security market. So SEBI was established on 12th April 1988 by the Government of India as an interim administrative body, means for a regulatory body, administrative body to promote orderly and healthy growth of the securities market and for investors' protection. 1980s was a decade. From 1980 to 1990, the interest in the capital market was growing, and at that time many malpractices came into light. So in order to prevent these malpractices, the SEBI was being conceptualized and it was being formed. So SEBI was given a statutory status on 30th January 1992 through an ordinance which was later replaced by an Act of Parliament as SEBI Act 1992. So today what we know is that we have a SEBI Act 1992 in place. So SEBI is the regulatory body of the Indian financial market. During 80s, as I just said, there was a tremendous growth in the capital market, particularly characterized by increasing participation of public, right? Up till the 80s, in the decade of 80s and 90s, the public participation was less. As I was saying, especially after the COVID in 1920 onwards, the public participation in the capital market is increasing at a fast rate. But before that, there was not very large number of public participation in the capital market in this country, right? So this led to many malpractices like violation of rules and regulations of stock exchanges. I am talking of 1980s and 90s era now, 90s era, right? Unofficial private placement, inside trading, price rigging. Means the companies did not used to follow the strict rules and regulations of the Companies Act that was the prevalent at that point of time. The stock exchanges were also involved in certain malpractices. The malpractices, time and again, the malpractices of the stock exchange themselves used to come into light, right? So there used to be official private placements, means the companies used to issue shares on a private placement basis by luring to the investors that they will give good returns, and they used to issue shares on a private placement basis, which was not ethical. Inside trading means that those people who know inside information, those who are associated, like people working at the senior officials level in the companies, they have some inside information. So those who have inside information about the profit, about the balance sheet, about the various information which can be price sensitive in the stock exchanges, which can increase or decrease the share prices, they used to manipulate the share prices, and by using this information, they used to manipulate the share prices. This is called inside trading. And price rigging. Many stock brokers used to form the cartels, and through these cartels, artificially, they used to increase or decrease the price of a particular share. That is known as price rigging. Means it is not the actual worth of the share, but through cartels, through some large investors who have deep pocket, they used to, especially the stockbrokers, they used to make involved in the price rigging, right? So to control these malpractices, the government of India decided to set up a separate regulatory body known as SEBI, means Securities and Exchange Board of India, which is popularly known as SEBI. So what are the objectives of the SEBI? For what purposes the SEBI has been established? SEBI has been working for basically for investors' protection. So to put it in perspective, to prevent trade malpractices such as inside trading, price rigging, which I just talked about, to protect the interest of investors and educate them. That is, how the interest of the investors will be protected. If there will be transparency in the system. If the companies which are, showing their profit and loss account, balance sheet, they must reveal the true profit. The company's balance sheet must reflect the true assets and liabilities of the company. They don't involve themselves in the window dressing of the accounts. Now there is a strict vigilance on the part of the SEBI and the stock exchanges to see to it that companies do show their correct picture of the profit and loss account, that is income statement, the positional statement, that is balance sheet, right, and the cash flow statements. So thereby enhancing the transparency in the system. So protect the interest of the investors and educate them. See, it is the continuous endeavor. I'll be talking in detail in this part of the lecture itself, that SEBI continuously educate people about their rights, about their duties, about the different instruments that are available in the market, what precautions they should take while investing, and so on and so forth, right? So to regulate and promote orderly functioning of the security market, means the objective of the SEBI is, and I will be discussing the functions of the SEBI, then I will be talking in more, but here I say that basically this security market, there must be orderly functioning, means as per the rules and regulations of the security market. To develop a code of conduct and fair practices for intermediaries like brokers, sub-broker, merchant bankers, lead managers, underwriters, right? So financial institution, mutual funds, all these must have proper code of conduct. They must follow the fair practices while dealing with their clients. So keeping these objectives in mind, the functions are being performed by the SEBI, because any organization, any regulator is supposed to perform the functions as per the objective, as per its preamble, right? So as per the preamble of the SEBI, as per the objectives of the SEBI, basically the role of the SEBI is in protective function, in form of protective functions, in form of regulatory function, where it regulates the stock markets and the intermediaries, development function. It also plays a role of developing the capital market in the country, right? So now let's talk in detail what are these protective functions, what are these development functions, and so on and so forth. So coming to the protective functions of SEBI first, it prohibits fraudulent and unfair practices like price rigging, misleading statements. When I talk of price rigging, basically the price rigging is a concept where artificial fluctuations in the prices of a stock, of a share, of a company is being made by the vested interest, by the vested groups. It may be brokers, it may be sub-brokers, it may be some investors themselves making a cartel and thereby making the price rigging, or sometime the companies itself may be involved in the price rigging so that they can show a better picture of the company's performance, right? Suppose a company wants to come out, for example, just an example, follow-on public offer, right? Or it wants to raise money from public through debentures or through other means, and it want to show the public the better picture of the company. So they may involve themselves in this price rigging, artificially fluctuating the share prices in the positive direction, in the higher direction. That is known as price rigging. Misleading statements. So many statements that are to be presented by the companies in the quarterly statements, in their annual reports, right, in their annual speech by the directors. The misleading statements should not be made by these responsible officers. So from this, the SEBI plays an active role, and it protects the investors from these malpractices and misleading statements. Control inside trading by imposing penalties for such practices. I just said when I was talking of the objective of the SEBI that inside trading means those who have inside information, those who are insiders. When I say the word insider, it means those who have direct access with the information of the company which is not in the public domain, right? It may be directors, it may be senior officers of the company, it may be the employees of the company or any other stakeholder of the company who has some information which is not in the public domain, which is not available to the stock exchanges. On the basis of these information, right, by using this information, they may make certain profits. They may make certain profits in the sense, suppose you have some inside informations, the auditor of a company, you are an auditor of a company. As an auditor of the company, you know that in the coming balance sheet, when the financial reporting will be done of the particular financial year, there will be a substantial jump in the profits of the company, because you being an auditor, you have access to the accounts of the company. So by using this information that there will be a substantial increase in the profits of the company, you start buying the shares of a company, of that very company in which you have an inside information, right? This is called inside trading, that you have certain inside information, and by using this information which is not available in the public domain, which is not available to the stock exchanges, which is not available to the general public, right, you buy these shares and thereby making the profit. That, as you know, that when the profits will be disclosed by the company to the stock exchanges and to the public, there will be a sudden jump in the, or I will say there will be a jump in the profits of the share price because of the good performance of the company. So if you use this information, this is known as inside trading. So those who manipulate or who uses these inside information, there must be imposed a heavy penalty. So SEBI, in order to protect the common investor, right, see to it that inside trading is being prohibited. SEBI promotes fair practices and code of conduct in the security market. Means to say level playing field. What this level playing field means? Level playing field means that everybody should know, everybody should have access to the information, and there must be fair practices by all the stakeholders, whether it is the stock brokers, whether it is the stock exchanges, whether it is intermediaries, anybody, right? So it helps in promoting practices and good practices of the investment and code of conduct in the security market. So in this way, they ensures investors' protection. Register means, now coming to the regulatory functions of SEBI, registers broker and sub-brokers of the market. Any person who is not registered with the Securities and Exchange Board of India cannot deal as a broker in the stock market, right? That is, earlier, especially the sub-brokers, there used to be a large number of sub-brokers who were not registered with the SEBI, and they used to help the investors in investing, means they used to act as a sub-broker of the public. So this is not allowed now. All those people who want to act as a broker or a sub-broker, they must be registered with the SEBI. The idea of the registration of the SEBI is so that the functioning of these persons can be checked, and there are certain qualifications, there are certain eligibilities, and there are certain norms. On the basis of these norms, these brokers get themselves registered, or sub-brokers get themselves registered with the SEBI. So what it means is, unless a person or a firm is not registered with the SEBI, the firm or the person is not entitled to act as an intermediary between the stock exchanges and the investors, right? So only those who are registered with the SEBI, they can act as a broker or sub-broker. So this will help in having a regulation, having a check on the functioning of these brokers and sub-brokers. regulates takeover bids by the companies, right? I mean, there are many times we call it hostile takeovers, or sometimes some unauthorized persons or people with bad intentions, they want to make hostile takeovers which are not ethical, right? And they don't follow the rules and regulations. So SEBI has come out with certain rules and regulation that if you want to take over a company, there are certain norms which are to be followed. The idea is a common investor, a retail investor's interest is being protected. Means if you're a large investor, if you have deep pocket, if you're a company and you acquire certain percentage of shares of the company, and thereby the takeover of the company takes place. If the takeover takes place in such a company, the interest of the minority shareholders may be impacted. So in order to protect the interest of the minority shareholders, the company has made SEBI has made certain rules and regulations for the takeovers of the companies. Regulate stockbroker, fund houses, stock exchanges, underwriters and merchant bankers. This I have already told that all these intermediaries, brokers, sub-brokers, they are being regulated by SEBI. When I use the word regulated, it means there are certain rules and regulations which are to be followed by these intermediaries. Idea of framing these regulations, all these regulations is so that, malpractices, so that, fair practices, or I will say the fair practices is being followed by these intermediaries, so that the interest of the common retail investors, common investor is being protected. Because see, if you are a large investor, if those who are large investors, those who have lot of money, they have access to the information, they have the knowledge, and they have specialized people in their offices who can check all these things. But a common man cannot check what are the rules and regulations, right? So in order to protect that, the rules and regulations are being made. Levy fees and other charges as per the Act frame rules and regulations of the market, right? So when a company wants to list itself in the stock exchanges, there are certain levies. If you want to be an underwriter, if you want to be a broker, right? There are certain charges which are being charged from them. So there are certain fees, there are certain charges which are framed as per the regulation of the stock market. Then comes development functions of the SEBI. Apart from regulatory functions of the SEBI, the SEBI also act as a developer. Developer in the sense, its job is not only to regulate the market, its job is to promote the market, so that more large number of investors do join the stock exchanges, do joins the capital market. As I was just saying in the beginning of my lecture, that 22 lakh new depository accounts have been opened in the month of August 2022 itself. And the number of depositories have touched 10 crore in India for the first time. I am saying that 10 crore has touched, but it doesn't mean that 10 crore investors are there. Probably one person may be having multiple depository account, right? So although there should be one account, but there are many investors who may be having multiple depository accounts. But 10 crore is a large number. And this is the result of that I am saying 22 lakh investors have, 22 lakh new depository accounts have been opened. It is the result of the efforts of the SEBI, or I would say one of SEBI's development function is also helping in the increase in the capital market in the country. So it provides training to the intermediaries of the stock market. Means if you are a sub-broker, or if you are a merchant banker, if you are a underwriter, if you are there are various training programs which goes on and which are being organized by SEBI, not only at the institutional level, but also at the school level, but college level. Different conferences are being organized. Idea is to create investors awareness, right? So development, it helps in developing the capital market in the country. Conduct research and publishes useful information for all market participants, right? Means SEBI has its own research team, and this research team makes various researches, publishes various market related informations. It see to it that whatever is happening in the developed world, what is happening in the American market, what is happening in the Nasdaq stock exchange, what is happening in the Dow Jones stock exchange. Why I am naming these Dow Jones and Nasdaq, because these two stock exchanges of America, United States of America, are considered very large stock exchanges having large market capitalization. The large companies of the world are listed in these stock exchanges. So how they function? I mean, what are their functioning system? The SEBI makes all the research of these and it publishes so that the various intermediaries can get benefit out of it. Provides and undertake measures to develop capital market by adapting flexible approach. Means as the time comes, if it also is flexible in the sense, I mean, as per the requirement of the day. When the COVID came, the various things were there. People are not able to physically handle the things. So it was quite flexible in changing its policies, changing rules and regulations so that the investor can work from home, the brokers can work from home, and so on and so forth. It helps in educating investors to broaden their understanding. Means there is a continuous endeavor on the part of the SEBI to educate the investors, right? So these are the various things, various role which SEBI play. It is a development role, a regulatory function, protective functions, right? So these are the three broad functions: protective functions, regulatory functions, and development functions of SEBI. I'll continue with the investors protection in my next lecture. Thank you very much.